Mastering the Accounts Finalization Process, a step-by-step guide. Hey everyone, it's Jose here and welcome back to the channel. Today we're diving deep into the world of accounting with a comprehensive guide on finalizing your accounts. Whether you're running a multi-million-dollar business or just starting out as a freelancer, understanding how to finalize your accounts is absolutely crucial. This process ensures your financial reporting is accurate, compliant, and gives you a crystal clear picture of your business's financial health. We're going to break it down step by step so you can master this essential process and avoid any costly mistakes. Now, I know what you're thinking. Accounting? That sounds about as exciting as watching paint dry. But trust me on this one. Understanding the ins and outs of finalizing your accounts can be the difference between making smart, informed business decisions or flying blind and potentially crashing and burning. Plus, when you have a solid grasp on your financials, you can unlock some serious growth potential. We're talking about maximizing profits, minimizing taxes, and making your money work harder for you. So grab your favorite notebook, pour yourself a coffee, and let's get started on this journey towards financial mastery. This is going to be a game changer for your business. Chapter 1. Trial balance preparation. All right, let's kick things off with the first step, preparing your trial balance. This is basically a financial snapshot of your business at a specific point in time. Think of it like a checklist to make sure you're starting off on the right foot. The first thing you need to do is make absolutely sure that every single transaction has been recorded in the correct ledger. We're talking sales, expenses. Every penny that's gone in or out of your business needs to be accounted for. Once you're confident that everything is recorded properly, you can create your trial balance. This document lists all of your accounts and their balances, like a summary of your general ledger. This is where things start to get interesting. You're going to list all of your asset accounts, like cash, accounts receivable, and any equipment you might have. Then you'll list out your liability accounts, which include things like accounts payable, loans, and any debts your business has. Finally, you'll list out your equity accounts, which represent the owner's stake in the company. Chapter 2. Adjusting entries. Now that you've got your trial balance sorted, it's time to fine-tune things with adjusting entries. This is where we make sure those financial statements are giving you the most accurate picture of your business's performance. We're talking about things like accrued income, which is revenue you've earned but haven't yet invoiced or received payment for. Then there are accrued expenses, which are expenses you've incurred but haven't paid yet. And don't forget about prepaid expenses, like insurance premiums that you've paid in advance but need to allocate over the period they cover. One of the biggest adjustments you'll make is for depreciation. This is the gradual decrease in value of your fixed assets, like vehicles or equipment, over their useful life. It's a crucial part of accurately reflecting the true cost of using those assets in your business. And speaking of accuracy, you need to make sure your inventory is valued correctly. We're talking about using methods like FIFO, first in, first out, or LIFO, last in, first out, to determine the cost of goods sold and the value of your remaining inventory. Chapter 3. Reconciling accounts. Next up, we're diving into the world of reconciliations. Think of this as making sure everything lines up perfectly, like a financial puzzle where all the pieces fit together seamlessly. The most common reconciliation is your bank reconciliation. This is where you compare your cash book, which is your internal record of all cash transactions, with your bank statement. You want to make sure that every deposit, withdrawal, and bank charge is accounted for on both sides. But it doesn't stop there. You also need to reconcile all of your other balance sheet accounts to their corresponding ledgers. This includes things like accounts receivable, where you confirm that all invoices have been sent out and payments have been received. And don't forget about accounts payable, where you ensure that all bills have been recorded and paid on time. Chapter 4. Finalizing journals. Now it's time to tie up any loose ends and get those journals finalized. This is where we close out all of those temporary accounts that we use to track income, expenses, and dividends throughout the year. We're talking about accounts like revenue, cost of goods sold, salaries, rent, and all those other accounts that get reset at the end of the accounting period. To close these accounts, we transfer their balances to either retained earnings or equity. Retained earnings represent the cumulative profits of your business that haven't been distributed to owners, while equity represents the owner's stake in the company. By transferring the balances, we're essentially resetting these temporary accounts to zero for the next accounting period. This process ensures that your income statement only reflects the current period's financial performance. Chapter 5. Preparation of financial statements. With all the groundwork laid, it's time for the main event, preparing your financial statements. These are the documents that paint a comprehensive picture of your business's financial performance and position. We're talking about the big three: the income statement, the balance sheet, and the cash flow statement. Think of these statements as the storytellers of your business's financial journey. First up, we have the income statement, also known as the profit and loss statement. This statement summarizes your company's revenues, costs, and expenses over a specific period, ultimately revealing your net income or loss. It tells you how profitable your business has been during that time frame. Next, we have the balance sheet, which provides a snapshot of your company's assets, liabilities, and equity at a specific point in time. It gives you a clear picture of what your business owns, what it owes, and the owner's stake in the company. Finally, we have the cash flow statement, which tracks the movement of cash both in and out of your business during a specific period. It provides insights into how your business generates and uses its cash, showcasing your operating, investing, and financing activities. Chapter 6. Notes to financial statements. Now, it's time to add some context and clarity to those financial statements with notes. These notes are like the fine print that provides crucial details and explanations, ensuring transparency and a complete understanding of your financial reporting. Think of these notes as the behind-the-scenes commentary that provides valuable insights into your financial data. You'll want to disclose any significant accounting policies used, such as depreciation methods or inventory valuation techniques. This ensures consistency and allows users of your financial statements to understand the assumptions and judgments made during the accounting process. Additionally, you'll need to disclose any contingent liabilities, which are potential obligations that may arise depending on the outcome of future events. This helps users assess the potential risks and uncertainties facing your business. Chapter 7. Review and approval. We're in the home stretch now. It's time for a thorough review and approval process to ensure those financial statements are squeaky clean and free of errors. This is where you bring in the big guns, senior management or your trusty accounting team, to scrutinize every single detail. They'll comb through your financial statements with a fine-tooth comb, verifying calculations, checking for consistency, and ensuring everything aligns with accounting standards. If required, you might even bring in an external auditor to provide an independent opinion on the accuracy of your financial statements. These auditors are like financial detectives, digging deep into your records and transactions to provide an unbiased assessment of your financial reporting. Their stamp of approval adds an extra layer of credibility and assurance to your financial statements. Chapter 8. Submission of financial statements. The moment of truth has arrived. With your financial statements polished and approved, it's time to share them with the world. Well, maybe not the entire world, but definitely with the relevant stakeholders who rely on this information. First and foremost, you'll need to submit your financial statements to regulatory bodies, such as the Securities and Exchange Commission if you're a publicly traded company. But it doesn't stop there. You'll also want to distribute your financial statements to your shareholders, investors, and potential lenders. These stakeholders rely on your financial statements to make informed decisions about their investments or lending activities. By providing them with accurate and timely financial information, you build trust and demonstrate transparency in your business operations. Chapter 9. Post-finalization activities. Congratulations, you've made it. You've successfully navigated the intricate world of finalizing accounts. But before you breathe a sigh of relief and move on to more exciting tasks, there are a few essential post-finalization activities to take care of. Think of these as the finishing touches that ensure everything is buttoned up and organized for future reference. First things first, make sure all those financial records, including supporting documentation, are properly archived. We're talking about invoices, receipts, bank statements, and any other documents that support the numbers in your financial statements. Store them securely and systematically so you can easily access them if needed for future audits or tax purposes. And speaking of taxes, don't forget to complete any necessary tax filings based on those finalized accounts. Conclusion: mastering accounts finalization. And there you have it. You've now got a solid understanding of the entire accounts finalization process. Remember, this isn't something you do just once and forget about. It's an ongoing cycle that repeats every accounting period, but by following these steps, you can ensure that your financial reporting is accurate, compliant, and complete. Now, I know this might seem like a lot to handle, especially if you're not an accounting whiz. But trust me, with a little practice and attention to detail, you'll be able to master this process and reap the benefits of accurate financial reporting. And hey, if you ever get stuck or need a helping hand, don't hesitate to reach out to a qualified accountant. They can provide expert guidance and support to ensure your financial house is in order. Thanks for sticking with me through this deep dive into the world of accounting. I hope